Hello and welcome to the High Altitude Investing live stream. This is Craving Crypto episode 12 titled When Moon? And today is 7/18 of 18. So we're going to be starting off with some Bitcoin technical analysis, answering questions, and then we will go into altcoin requests towards the middle as always and do any Q&A that we can get from the questions live as we go. We've got a couple extra charts. We updated this document. As always, you can get these documents in the description of every single video. So if you go back to the last podcast that I did, you'll see that the description has a document and it just has some resources going along with that week or that episode. As you know, we have been doing episodes 3 times a week now, which is every Tuesday, Thursday, and Friday. Today's upload for Tuesday got pushed to today, which is a live stream as you can see currently, but expect a normal upload on Thursday and Friday as well. So let's just see if everybody's tuning in here. Good to see everybody. Happy Wednesday, happy moon, by the way. We did get that bounce. If you know, I was bullish in the other live stream, and we got that bounce up to those resistance levels that we were talking about. So we're going to be updating some of that and of course, doing all the technical analysis as usual. So, all right, cool. We'll make sure to have EOS in our request list when we get closer to the middle of the stream. I appreciate that request. Okay, we will just see if we got a couple more people tuning in here, and then we'll just go and get going on this. So. But yeah, no, the crypto space has been exciting lately. Crypto Twitter got crazy as hell again. Everybody's posting a bajillion charts and updating their TA. And, you know, just as always, there's a bunch of people posting new bear charts and a bunch of people posting new bull charts. So everybody's getting excited and taking positions in whatever direction they're invested in. So yeah, things are getting a little bit hypey. If you go to Google Trends and look at Bitcoin and cryptocurrency in Google Trends, the trend has had a huge spike, a bigger spike than the price actually has. So that's an interesting thing to take note of and be watching over the next little while. Welcome, Sander. Good to see that you tuned in. And there is some bullish news and stuff too that was going along with all of this, like Coinbase rumoring to add multiple different coins, and then, you know, just like the ETF stuff that everybody's hyped about, Bitcoin ETF and how that could affect the price. So welcome, Wilco. It's good to see you tuning in. Yeah, it's a happy Wednesday in the crypto space. I was just barely looking at Dash USD. We can do that one towards the end of the video or the middle of the video when we get into altcoin requests. But for now, we'll just go straight to Bitcoin and do our TA on it first. So let me just pull this up and make sure that I can move these drawing tools. All right, so as you guys know, around this price range, I was expecting it to bottom, let's see. Yeah, I did a live stream when we started to fail support right here at 7,900. And I said that I expect Bitcoin to bottom somewhere below 8,000. I don't know exactly where, but I knew that this was going to see some support here because each time Bitcoin has a sell-off, it bleeds out and squeezes everybody that's going short into this tiny little range and then pops up again. And so that happened right here. That happened right here. So it squoze all these sellers, And again, if we draw this same pattern, it happened again. So it's happened 3 times that we've had all these sellers come in and they just get squozed into this tiny little range. And then there's no more sellers left and the price is breaking out of that point. So that's what a falling wedge pattern looks like. And when you have 3 of them in a row like that, that generally means that there's less sellers than there was up here at 20,000. So that means the amount of them is way less than what we're seeing at these levels. And you can see that in the fractal because it gets smaller and smaller. So the first wedge is really big, the next wedge is really small, and then the next wedge even after that is smaller. It's a little bit kind of longer, but it's not as wide, and it is a little bit of a smaller shape, right? So As you can see, the sellers are getting less and less as you drop. Now, if we go into, let me just remove all these wedges real quick here. If we go into a little bit of a bigger time frame on Bitcoin, so this is daily candlesticks. If you want to click on the weekly candlesticks, you will get a bigger picture move here. Let's just go check the stream health and make sure everything's okay on that end of things before we get too far into this, because I am starting to experience a little bit of latency here. So all right, so the stream health is orange. That should be good. It must just be some latency on my end of the computer. So candles look a bit pixelated. Okay, give me 2 seconds. I will be right back. I need to check on something for the Wi-Fi. All right, let's see if this fixed it. Sorry for the little interruption there. Okay, so yeah, it looks like it's running a little faster here. We'll just get right back into this. Oh yeah, this is definitely much better now. Okay, so on the weekly candlesticks, as you can see, we've had a huge bullish candle come in, where buyers came in at about 6,300 and then went all the way up to the $7,600 levels. And as you can see, we are now curling on the MACD. So if you do not know what the MACD is, it's just an indicator. And if you do not know what an indicator is, I'm assuming you're pretty new to technical analysis and trading. So I recommend going to my playlists on YouTube, clicking on the Bitcoin and altcoin trading for beginners playlist. And in that playlist, you will find a bunch of videos explaining the absolute basics, so you know like what indicators are and how to use TradingView on a basic level. But yeah, MACD is basically a momentum indicator. It's this thing that's on the bottom of my screen right here that shows these two lines and then this thing in the center called a histogram. So it kind of shows you whether a market has had too much buying or too much selling, and it gives you early indications on where momentum might be shifting back on the upside. Now, for this current price action that we've had happen, you can see on the weekly candlesticks, this is really oversold. So these two lines means overbought and oversold. If they're really, really high right here, then it's overbought on the MACD, meaning that the momentum has had too much upside growth and needs to correct. And if they're on the bottom right here, then it's oversold, meaning that the momentum has had too much downside expansion and needs to go back on the upside. So that's what we're seeing here is a nice curl in the MACD. The histogram is also about to flip back up right here, which will bring more bullish momentum. And then these two lines are about to cross similar to the way that they did right here, which is another buy signal for the MACD. So we have weekly MACD signals that are pretty strong right now. Now, a lot of people are like, well, Dallin, what about the monthly MACD? Because they come click and then they see this right here, that the MACD on the monthly has had this huge cross. And I like to point out to them that this is likely to see continuation. When you have a cross like this, it doesn't instantly flip in momentum. Often it continuates in that direction. And you can even have a histogram flip like this and still have these two lines see continuation on the upside. So I am aware of the monthly histogram on the MACD, but I see the weekly as a stronger signal, especially since it lines up with the daily MACD, which is also a really strong buy signal currently, as we've already had a pretty big divergence in the MACD over here. So things are looking really good for Bitcoin. And again, as you know, in my previous streams, we were talking about how it will head towards these resistance levels, and then how I said I wouldn't give you exact targets because that's VIP content, because I post signals for my VIP members and updates on the prices. But as for the free viewers, just understand that we have hit those resistance levels that we're talking about. There may be a tiny bit of short-term selling off over the next couple days. You might get a little bit of a sell-off, but the trend is strong, and I'm not really expecting this to see any more downside movement below the 5,800 levels. Now, that doesn't mean that it can't happen, but currently the momentum is really bullish. So if you want to do something as far as a defensive move would be, is if you start to sell off and you start to see weakness in the market, meaning that if prices start to go back towards those support levels that we found at 5,800, then you could take a little bit of tether, not very much. Think in terms of like 5 or 10% of your portfolio, and put maybe 10% back into the dollar tether if we start to see weakness here. Because if this does go in for a new low, it might panic to like 5,000 or somewhere in that range. So it's just a risk management thing. Currently, we're really bullish, but if all of a sudden we see some weird weakness show up in the market, then you want to be aware of that and play it. And you don't want to just ride all the way down to 5,000. You do want to take little bits out and in if you see certain potential setups. Now, that does not mean that I think that will happen. Currently, this is looking very, very good for the bulls. And I pointed this out in a lot of different charts of mine and a lot of different live streams, but this is a classic market cycle, a classic Wall Street cheat sheet. And when you fall like this hard, this has all been selling action. And just like what we saw over here, which was all buying action, these trends don't stay forever. So just like we saw the bullish trend right here that looked really, really good, and then we came all the way up to 20,000, and then it saw a reversal, and it was like, nope, I don't actually want to go any higher. This will do the same thing. So the selling that happened all the way from 20 down to these levels has to flip at some point. And this looks to me like the beginning of that flip on the upside. And we do have volume confirmation on the breakout. All of the different exchanges, Bitcoin exchanges, are starting to see volume increases. And generally, things look really good for the whole crypto space. So, okay. Let's see if there's any new questions. Have a look at ADA. Okay, yeah. So when I finish my Bitcoin TA and talking about kind of everything that's going on there, we can go right into ADA too. So, but hasn't this been one hell of a ride? Like, holy cow! I've been charting Bitcoin since 2015, and like just to see the way that this thing grows and expands has never stopped blowing my mind. Like every single little swing along the way, What was really exciting was early on. It was really slow for me, actually, because I got into Bitcoin right here, this huge sell-off phase. It was growing basically ever since I got into it, but this was actually really exciting to be part of Bitcoin and cryptocurrency early on like this, in this phase, because I remember just going around and talking to my friends about it, and only the people that really kind of were how do I word this? The people that were just kind of got it, you know what I mean? Like people that were into a lot of really cool things and up to date with technology, and they just kind of understood like what Bitcoin was. It was so fun to meet up with them and talk with them about this and find them in my hometown. There wasn't very many of them. I can think of like 5 people that actually like listened to me and would do this with me. But to this day, I still respect those people so much because they saw it early. They listened to me. They agreed the fact that this was going to be crazy, and they started buying it with me. And then we started, buying, and then it got really interesting right here at the $1,200 levels. And I just knew this thing was going to go so high. I didn't know it was going to go to 20,000, not when it was at 1,200 or anything like that. But I did know it was going to go really, really high after this. And sure enough, it just started going parabolic like this. Everybody thought the top was at 3,000. And I was like, nope, we're not going to see a top here yet. And then everybody thought the top was at 5. It's like, nope. And then everybody thought the top was at 78. Nope. And then, as we got towards 15,000, 10,000, and 20,000, I started getting a little scared. So I started selling 25%, 25%, 25%. And it's a good thing because this correction was pretty intense. Now, that's just an example of when other people are greedy, you're scared, right? And when other people are scared, you're greedy. Right now, everybody is scared as hell in the cryptocurrency space, at least people that don't understand TA and market cycles. Most people on Twitter or really anywhere that you go look, they're so scared. They're acting based in fear, just like they're acting based in greed along a bull run. So when people are really, really greedy, you want to be scared. And when people are really scared, you want to be greedy. So right now, why do you think I've just been telling people to accumulate and accumulate and accumulate? Often when I do that, what's crazy is just because of the psychology of markets, a lot of people look at that and they're like, oh, wow, you're telling people to accumulate a sell-off? Why would you do that? Why don't you wait until it's on an uptrend? And I'm like, well, I play the big swings. So I play the ones that give me 3,000 and 5,000%. Sometimes less than that. Sometimes you only get 600 or 700%. But I focus on that because I'm not really worried about what's happening next week or tomorrow. I mean, in a sense I am, but I'm not taking actions with my capital every day. I'm taking actions once a week, maybe every couple months. I'm not making decisions every single day to buy or sell my crypto. That's just not how I found to be highly profitable in this space. So when I tell people to accumulate a sell-off like that, a lot of people are like, what are you doing? Why would you do that? But I'm a dip buyer. This is my strategy. I accumulate panic and then I average out of greed. And when we had this greed phase, averaged out, and now that we're having this panic phase, I'm accumulating. And then when we really start going back into greed, and when I say greed, I mean serious greed. I mean 50K plus greed, per Bitcoin. That's when I'm really going to be taking major selling actions again. Right now, this is all accumulation action. So when we're in massive greed again, I'll be interested in taking some of my Bitcoin off the table. And I'll take a tiny, tiny bit at 14,000 range, Not going to give exact targets or anything like that because I plan on posting signals for that type of movement. But the actual profit taking, the serious profit taking isn't going to happen for me for a while. And that's just because I'm worried about making that 5,000% gain. Not necessarily on Bitcoin, but at least on majority of alts. And I'll make with Bitcoin, I expect to make pretty close to 1,000%, maybe a little more, maybe a little less. We'll just have to see how all that plays out. But altcoins are going to be huge percentage gains in the next bull run. So yeah, things are looking really good in the crypto space. That's kind of my strategies, my thoughts on everything. Again, just reminding you not to get so stuck up in the tiny cycles. Don't be panic selling right now. Don't be panic buying either. Just accumulate, buy. If you have 30% into Tether, then put 1% a day until you've got 20% in. Think accumulate the panic. Don't just go all in at once. Be very calculated with your movements and your actions. So, but yeah, I think that's basically got the gist of what I'm thinking on Bitcoin. Let's see how everybody's going in the live dashboard. Hey, Benjamin, welcome. Good to see you tuning in. All right, ADA. So we're going to start doing altcoin requests now because I've pretty much went over everything that I think about Bitcoin, and also in my last live stream, it was titled Bitcoin Technical Analysis. So I've already went over my technical views on this whole sell-off and everything in that. So you can go check that out if you want to. I compare it to the NASDAQ, and you can also find my comparison on the document that we provide this week. And the comparison is posted. It's called Sick of the Correction. Read this. And this was a TradingView post. When I posted it put me in the top traders for a few days on TradingView. So that was pretty fun. And this is basically just a overview of my entire perspective on the correction that's happened in Bitcoin, how I think about it. I show some charts of when I was buying Bitcoin at the $520 levels. I was showing how I was predicting more bullish movement when we were at 1100. So I basically just show some of my early technical analysis. Like this one is August 16, 2016. I just said to buy between 520 and 540 here in Bitcoin. And that was a really, really good zone. As you can see, prices just rallied after this point, continuously rallied on the upside. And then I also post how I saw this as being a huge bullish accumulation curve for Bitcoin when we were at 1200. I know a lot of people started getting really bearish here and saying that we were going to do an ABC down to 5,700, but I figured that this was already the ABC in place and that this was going to go really parabolic. Sure enough, this went really, really, really parabolic after that. So I basically just show all of my previous predictions, talk about the whole perspective over Bitcoin. And, if you don't follow me on TradingView already, go ahead and do so. Dallin_Anderson. If you don't know what TradingView is, it's basically a huge platform where you can chart these coins, chart stocks, chart silver, chart gold, and then you can post it kind of like Facebook for traders, but a little bit different, where you just do a post of your idea of where it's going to go, and then all the other traders follow you or say if you're accurate or not. So it's just kind of like a place where you can share your perspective on everything. This was my Elliott wave count that I made in December 5th for Bitcoin. This was when I said that there's a potential for Bitcoin to top out at 20,000. So this was a very good call, one that I'm very, very proud of for Bitcoin in the crypto space. I'm saying that it was just going to hit the 5 wave and then do an ABC correction here. So, and then sure enough, I've got these updated charts right here for Bitcoin, the NASDAQ comparison. Where is it? Me comparing it to the NASDAQ right here. It's a very, very perfect fractal comparison between the two. And then me comparing it to the 2014 Bitcoin and saying why this is not what this is happening. I talk about why it's not the 2014 fractal, even though everybody likes to think it is. And then I also compare the NASDAQ on the smaller time frame to what's happening in Bitcoin today, and showing why bullish continuation is a lot more likely in this scenario. So, because it's happened in the past, the same human behavior. So, okay, let's get into ADA. I've talked enough about Bitcoin. Everybody is probably well updated on their Bitcoin prices. Let's get into the altcoins, everybody's favorite gamble. Tom, we talked in the Poloniex troll box 1.5 years ago. Nice. I remember being on that Poloniex troll box in 2016. I remember when Ethereum was added, when Zcash was added to Poloniex, and it was just it was so fun to be on there in the early stages and talk with everybody about it. It's just like good memories. All right, so yeah, ADA. Let me do the Bittrex chart just because we'll have a little bit more data on it. If I can get the Cardano. Maybe. Do we have more data on it? Not really. ADA. All right, I guess we'll do the ADA Bitcoin, even though I like to chart things in the dollar. So, my bias for ADA is the same as what it is for Bitcoin, which is basically bullish. So ADA landed onto support very nicely. This one is easy to count its Elliott waves, like very, very easy to count. You basically just grab your one tool right here and then you just go 1, 2, 3, 4, 5. And this one did a huge ABC correction, A, B, C corrective wave to about 1600. And then we have a 1, 2, 3, 4, 5 impulse. And then a very easy to see A, B, C correction. And what's interesting right here is even on the smaller time frame, you've got a nice 1, 2, 3, 4, 5 popping up. So you can literally count the waves all the way from here over to current day prices. Okay, there we go. Now let's zoom in a little bit. Can you see how that lines up very nicely here with ADA? 1, 2, 3, 4, 5, ABC. 1, 2, 3, 4, 5, ABC. 1, 2, 3, 4, 5. So you've just got the cycle repeating itself. Now, this is also what's considered to be a W bottom formation. You probably don't see it unless you have a little bit of a trained eye. So let me just draw what you're expecting to happen out of this. But basically you have the left W right here, and then you have the center of the W, and then you have the right part of the W coming out, right? So you could call, some people might have another name for this pattern, but I like to call it the W bottom formation. But yeah, you can name this one whatever you like to. But either way, this is a very real stock trading pattern, and it basically just shows the cyclical nature of markets. They move in sine waves. So you have a pump, a dump, a pump, a dump, a pump. Very cyclical and sine wave-like. And then it also just shows two rounded bottom formations. And rounded bottoms are great indications that you're having a dying of sellers, because as something rounds out, then that means that the sellers are just having less and less and less and less and less, and buyers get stronger and stronger. So you've got one right here, and then we can just clone this and move it over, adjust the angle a little bit. And then you'll see the other rounded bottom pop up after that. So yeah, that's that W bottom formation I'm pointing out in the kind of rounded bottom. Also, if you want to do some momentum analysis, you can see that the MACD is about to curl up like this. And also due to the reduction in the volatility of the histogram, we're expecting an increase in volatility on that histogram due to the fact that you never have zero volatility forever. You know, if it's an asset that people are buying and selling, they're going to speculate on it. So volatility goes and comes, but it's never gone forever as long as there's speculation. So, yeah. Now let's just go and see other altcoin requests. Let's see, you want me to try counting PPT? I can see if I can do that. All right, so yeah, I know why you're having difficulty counting this one. And it's because it was added late. So what you have to do is you have to stop and think to yourself, okay, what would this look like if it already had a market cycle on top of it? So one way to do this is you can go ahead and add another chart to your TA. You just add an additional chart. Okay. And this is for comparison purposes. So you click on the bottom one, and then you click on something that already has a full market cycle completed. So I believe that sand dollar, this would be a good one. Let's see. Okay. And then this is a complete, like 1, 2, 3, 4, 5 expanded flat. It's not an ABC, but it's an expanded flat correction. So we can take this, and then there's this ghost feed tool, and you basically just start from, let's see, this one, beginning of 2018. So yeah, probably about right here. Oops, wrong tool. Not the ghost pattern tool, my apologies. You want to use the bars pattern tool. So basically what I'm doing here is I'm copying this fractal. I'm going to take Control C. I'm going to go right here and I'm going to paste it on here. And then we're just going to lay this right here, stretch it out a little bit until it lines up. And then you can see, okay, using another chart, you can kind of define where it's at in your current chart. So if you're having a hard time counting waves on something, just go look at a previous market cycle, and if it hasn't had much time on the exchange, you could kind of line up a fractal or a market cycle from a different coin, throw it on top of this one, and give yourself a pretty good idea of where you're at in this coin as well. So, in my opinion, since this was a 1, 2, 3, 4, I'll count the bottom chart first. 1, 2, 3, 4, 5. And then this was an expanded flat correction, meaning that the B wave goes above the A wave. It's a little bit of a more difficult Elliott wave pattern. And then the C wave goes right here. So this was an ABC, and this was your first impulse down being a 1, 2. This would be a 3, 4, 5 wave down. So in an expanded flat correction, you have 5 waves down. That's what happened here. So if you're counting this coin right here, then you suspect this to be like a 1, 2, 3. Oops. Let's see. You just kind of go off from where it started and say 1, 2, 3, 4, 5 waves down. Okay. So you're expecting the bottom to be in with the bottom of the other coin. All of these coins are also highly correlated. So if Bitcoin starts bottoming out, everything else starts bottoming out. Same goes for like Ethereum, any of the big names. So if you're having troubles counting, just imagine a market cycle to the left of it, because it got added to the exchange late in its cycle. So that means that it's going to look really funky. So you just kind of imagine that there's a cycle to the left of it over here, and then apply what's going to happen in the future to the right. So that's how you would count a complicated kind of chart here. I hope that answers your question pretty well. Yeah, so Tom, I pretty much use Elliott waves, Fibonacci, and fractals. And, by fractals, I mean either a market cycle or just like a picture of a chart, just a way that if humans have thought in the past. And that's the majority of my analysis. So yeah, they're really useful, Elliott waves are. It's a good way to get a good perspective on the market. It's not everybody's favorite tool, and I recommend that everybody uses a strategy that they can use. So if you start to use Elliott waves and it confuses you too much or it doesn't work for you, maybe go look into Wyckoff theory, go look into trading patterns only. Some people only trade like inverse head and shoulders patterns or triangles or pennants. Just look into all the different strategies and find out what works for you. But for me, this is the easiest way. I play big cycles, 2 to 3 month cycles, sometimes a little bit longer, and I use Elliott waves and I sell into high greed and accumulate high panic. And I average in and out. I don't try to get all these little 3-week or 1-week swing trades. I don't try to go for 1 to 2 day trades. I have been practicing that a little bit on BitMEX for fun purposes. And if I do get that dialed down, I may even make like a course on the day trading stuff. But for the most part, I found more profitability, less stress, and higher accuracy trading the big cycles with Elliott waves. So now let's just go into the singular and start taking other altcoin requests. Our Aja, when moon is soon. Basically, like in my opinion, the bottom is either in or very close to being in. So let the cycle ride out and the moon will be soon. So you're welcome. I'm happy to help you understand how to compare those. Yes, LBC, we can do library credits. This one has had the most price history on Poloniex, so we'll go there. Now, LBC has also done a complete Elliott wave market cycle. So what has happened here is you get a 1, 2, 3, 4, 5 wave up. This one has a very, very small one wave, and this is common in cryptocurrencies, so I'd like to point this out to you so that you don't get confused sometimes when you're counting your waves. But if you go into the logarithmic chart, you see the one wave better because it doesn't show the linear growth curve, it shows the logarithmic growth curve. So you can see all of a sudden that this was a 1, 2, 3, 4, 5 wave. And then this was an ABC correction, right? So we're looking at A, B, C correction, like that. So you can count the Elliott waves a little bit easier on the logarithmic chart with this one. And you just click on log again, and you can see this is what it looks like on the linear chart. And so that's why the one wave is so small here. This one did not have an extended fifth wave. So what happened in coins like Stellar Lumens is this fifth wave right here extended up really, 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 really high, and there was a ton of FOMO. This one just barely made a new high and then corrected afterwards. So it was not an extended fifth wave, but that's just because this coin probably didn't have as much hype as Stellar Lumens in the previous bull run. Now, this is completed its ABC correction, so it's highly probable to only see upside growth from here. But again, if the rest of the market for some reason doesn't hold support, it's always possible for it to go down lower. You never want to close your mind to anything in markets. Now, let me show you what that Stellar Lumens fifth wave looked like, which is a little bit more impulsive. This is what's called an extended fifth. Oops, not Stratus. STR. Stratus looks very similar to library credits too, actually. Yeah, this is an extended fifth wave. So if we just click on the logarithmic chart here, and then we count our Elliott waves, you'll quickly see that you have a 1, 2, 3, 4, 5 wave, then an ABC correction, and then check this out. you just click, well, let me just draw the ABC correction first, actually. Getting ahead of myself here. A, B, C correction. And then we just click back on the log chart. And then you quickly see, holy cow, this had a huge extended fifth wave. In comparison to the size of the third wave, it looked like nothing, right? So this is a better kind of chart. Like, this is what you want to see happen. You want to trade the coins that show a lot of bullish conviction, that start breaking out early, and Stellar Lumens was one of those. So the extended fifth wave was kind of expected. Verge is one that we have seen similar volume spikes and similar kind of fundamental hyping around the same time. It would not surprise me if Verge saw an extended fifth wave in the next cycle. So, just pay attention to this one for a little while and see if we get a similar price reaction in the next wave as what Stellar Lumens did in the 2017 run. That bullish conviction is a good sign. It means that your money is better to be there than anywhere else. So yeah, let's go over more requests. Google user, I have Elliott Wave explanations both in the lifetime course and then highly detailed in the mastermind course, but I do not have anything other than my live streams out there for free Elliott Wave counting. But there's a ton of information on Google, and again, if you stay to the end of this, you'll have a coupon for my website. If you want to learn it from me, you can also go to my website. I have a video course, and again, the lifetime and the mastermind both have Elliott Wave information. So this is uploaded later, Google user. So if you want to come back and watch it, you can see my ADA prediction. We're not going to go back to that because we already started on it. So, but yeah, Google Elliott Wave rules, and it'll just pop up the basic rules of using Elliott Waves. And then if you want to dive further into that, stay towards the end of this, and you can get my stream link. So. Tom Muller, the reason that BitMEX has a 5% difference in their exchange price is because BitMEX are contracts, so they take the prices of two exchanges and then they have a perpetual swap contract on that price. Now, what's interesting is BitMEX is one of the highest volume exchanges in the world. So if it's a little bit higher in price, then that usually just means that it's because there's so much volume that it's leading the rest of the market. So the 5% difference in price is really just the fact that there's so much more volume that it's a more real price. Value is a belief. And you could always look at it in lots of different ways, but at the end of the day, it's a belief. If you give somebody a rock, okay, and they go take it to some random person at the market, some lady at the flowers market, and she's like, oh, I want that rock for my garden. She might give you like $2 for it, right? She'll be like, okay, I'll pay $2 for that rock. But if you go take that rock to some person at a museum, they're going to be like, okay, I want to pay $200 for that because this is a rare rock. And if you go take this rock to somebody that's a, geologist or somebody that's really, really into rock collecting and they see the actual value of that rock, they might pay $2,000 for it. So value is a belief, and the same thing happens in the crypto space. If somebody believes that something is worth a lot, then they'll buy it for that. And so if one exchange has more volume, then they might be a little bit more essentially hyped. They might believe it's a little bit more valuable over there, even though on the other exchange it has one value. Some people take arbitrage for this. So what they'll do is they'll find one exchange and see that the price is 8,000 per coin, and then another exchange and see that the price is 7,800 per coin. They'll buy a bunch on the exchange where it's 78, send it all the way to the one where it's 8,000 and sell it there. And because of the fact that cryptocurrency is an open marketplace and value is just a belief, they literally can print free percentage out of the arbitrage, the belief difference between two exchanges. This is something that I haven't done very much, but some people in my Discord group, in my VIP area, before they got into trading, that was their primary source of producing value in the crypto space. So, value is a very interesting thing too, because if you provide value into other people's lives, you get a lot more value back in yours. So that's a whole topic of discussion that I like going over and is one that I'm really passionate about. So great question. Yeah, arbitrage, it's contracts, so you can't do it on BitMEX, unfortunately. But there's still other exchanges. Like I made a video a couple episodes back on the Craving Crypto podcast where I was like, hey, look at this exchange, this WEX exchange. For some reason, the price is over $1,000 different on this exchange than it is everywhere else. And so a lot of people may have been taking advantage of an arbitrage opportunity. I don't know if deposits and withdrawals were enabled though, so they may not have been able to. But that is just one example of how you can. Am I pronouncing it wrong? Dark and groovy. I apologize if I pronounce it wrong. Some of these terms I learned through just reading myself on the internet, and I wouldn't say that pronunciation was my best subject. So if I pronounce arbitrage wrong, I apologize. KMD, please. It's had a massive correction. Yeah, let's go into KMD. Sounds like a good one. All right, so yeah, this one looks amazing. This is the same kind of story that we're seeing in all of these coins. This one did have the extended fifth wave. So this is a one. Oops. Yep, there we go. Come on. Don't lag out on me yet, computer. Okay, there we go. So yeah, this is going to be a 1 and a 2, a 3, 4, and then this is your extended fifth wave right here. Huge fifth wave up. And then you have your trend line right here. Trend line fails as support on the way down. That's very common. This is no reason to, if you're selling, you should have already been selling up here anyways. So if you have a trend line failure like this, you just know that you're going into the despair phase of the market cycle. And that's exactly what happened right here with KMD, is you failed the trend line and you break up, you test the trend line again, and you go lower. So this is despair. And then we can count an ABC correction. So this would be an A wave down and a B wave right here. And then the C wave stops right here. So as you can see, that's very, very nice at $1.37 for the C wave. So this, in theory, should be going for a 3 wave next. So this is going to start painting subwaves. It's going to go back up above this trend line and should continuate on the upside quite a bit after this. So KMD looks really good. It's classic market cycle. 1, 2, 3, 4, 5 impulse, fell below the mean and into the despair. If you watch any of my live streams, then you know all about that. Trend lines aren't always useful as far as the buying opportunity goes. I don't actually buy based on trend lines. I buy based on Fibonacci and Elliott waves. So, for example, Monero, okay? This is a coin that I have been accumulating. And I set buy orders because here, let me just kind of remove all these drawing tools here. I don't need to share too much of the details on that TA quite yet. All right, so I started taking selling actions right here when we were going parabolic. And then I set buy orders on Monero. My first buy order was at $181. My next buy order was at $150. And then my last buy order was at $100. And my $100 buy order barely got missed. But after this bounce right here, I was able to take that buy order out and then put a new one in at about 110. So it wasn't really the end of the world that I didn't get that $100 buy order. I still got in at a really good time here for Monero. So how did I know that was happening? Because I saw an ABC correction coming. This was a very big 1, 2, 3, 4, 5 wave. So I used Fibonacci and Elliott waves to start buying rather than using a trend line to buy. Because if I would have tried to use the trend line, if we just add a trend line right here, this trend line right here wasn't ever touched, and this trend line right here fell. So it failed this trend line between the 3 and the 4, and it never touched the lower trend line. So the trend line actually would have been a pretty useless tool for an entry on Monero. But because I was able to buy an ABC correction, which ended up turning into a triangle pattern, actually, this is a triangle correction, an A, B, C, D, E pattern, then I was able to still average in on a huge level of panic here, and it was right in between the Fibonacci retracements. See? Between the .618 Fibonacci retracements and the .786 Fibonacci retracements. So that's how you use Fibonacci and Elliott waves to buy rather than using trend lines, because using those trend lines would have not given you good entries anyways. And you can use resistance and support trend lines for drawing patterns like this falling wedge that we've made. And this might give you good entries along the support trend line. But trend lines like this for entries are generally inaccurate and they end up breaking. So they aren't the best kind of tool for that, as a little pro tip there. Sander, I generally do not it depends on the time frame, okay? So if I'm trading like a 1 or 2 week time frame, then yeah, I will sell on the smaller wave. So I'll sell it between the 1 and buy again at the 2, and then sell at the 3, and then buy at the 4, and then sell at the 5. And it really depends on how you want to play the waves. But I find that just selling in the 5 and accumulating in between the 2 and the 4 gives me more profitability and is less stressful than trying to play every single swing. Because if you start trying to play every single swing, you might get your wave count wrong, and then you might try to sell too early, and it just becomes kind of trying to predict the market perfectly rather than be smart and play the big swings and average out when you know that this is in a 5th wave and you're like, okay, this is going really parabolic. I've already bought at the 2 and the 4 now. I need to be getting out at the 5th. It's just less stress, and you'll have probably better accuracy focusing on selling into the 5 and buying the 2 and the 4 rather than playing every little swing along the way. But again, it's time frame specific. So just like you can see the subwaves, just like you can see this 1, 2, 3, 4, 5 up, if you go in to this one wave back here, right here, this has a 1, 2, 3, 4, 5 ABC. So inside of this one wave, you could have even played the swing inside of here. You could have played this 1, 2, 3, 4, 5. A, B, C. So it's a trading strategy thing. It's what time frames you're trying to play. If you're trying to play these smaller time frames and trade all the way up 1, 2, 3, 4, 5 ABC, and then go all the way into the next wave like this, and then finally sell again when you get up to the 3 wave, and then try to play the next cycle, because again, this was a big 1, 2. So you can count the subwaves of the 3 too. You can just keep on counting 1, 2, 3, 4, 5. See? And that was the top of the 3 wave. So there's waves inside of every single wave. It fractals out. It doesn't matter what time frame you're trading it in. You can always count the waves inside of it. So again, if you're trying to play all these little swings, you can. You'll probably go a little bit crazy. It's smarter to play these big swings. Although I will say that when I was learning all of this stuff back in 2016, this XMR one wave, where it went from $2 all the way up to $15, I made enough money off this little wave right here to buy my first car. So I bought a BMW, a 2001 little silver car, and my buddy that I used to hang out with when I was like 11 years old was like, hey, I'm trying to get a new car before I go to college. I've got this one. I'll sell it to you for pretty cheap in comparison to what you normally would. And so I was able to finally get enough crypto profits to get myself a car at about 17 years old with this kind of pump that happened in XMR. So that was fun. That was a little accomplishment for me in my life. And it was XMR and Monero and this little Elliott wave that happened, this market cycle that allowed me to do that. Now, funny story on top of that, I actually, because I was still relatively new to learning all of this, I took enough profits for my car, but then I tried to hold the position, and I tried to hold through this entire ABC correction here. And because I had taken enough profits out for my car, I wasn't really too stressed about it. But I was in a margin position on Poloniex and ended up getting liquidated. And I only had like $600 or something in my Poloniex account at the time. I was super new to all of this. And I lost like everything. I was like, wow, my life sucks so bad. I got this, but like now, why was I thinking? I was so depressed. I was like, why would I ever do that? And I felt like I would never be able to learn all this stuff. And I was like, and it was just like it was a good learning experience. It was painful, but it was a good learning experience, And I since after that point, I learned risk management and all of these different things. And it took all of those kind of things off the table for me and made it so I wasn't getting liquidated like that and losing all of my portfolio in one trade. So, I mean, that's just that's a cycle though. And why you got to be aware of the Elliott waves. At that point in time, I did not understand Elliott wave theory. I was trading with other tactics and they failed me. So this works a lot better. If I would have known Elliott waves, I would have understood the downside potential risk for an ABC correction and taken enough off the table that it wouldn't have been possible to get liquidated in margin back then. So, but yeah, I like to just be transparent with you guys and tell my stories because I'm not trying to come up here and be like, I've never done anything but make money. I've never lost money in crypto. Anybody that says that, never trust them. Because to learn this stuff, you're likely to lose a lot of money. If you keep doing it, you'll make way more than you ever lose. You will. But when you're learning all of this stuff, you're going to have some cycles play out. You're going to get burned. You're going to get wrecked. So it's as a trader myself, I love to be transparent about these stories because when you have them happen to you, then you will not be as damaged. You'll be like, okay, I can learn from this. I don't have to walk away and never do this again. I just have to make sure that I never do what I did wrong again. So if you didn't sell in January, I can see somebody saying that they did not sell in January and saying that they know how I feel. That's very understandable. This was probably one of your first major market cycles, and the crypto space happens fast. So it pumped within the period of a few weeks, and everybody was like, woo, we're all rich, this is amazing. And then, of course, it dumps over the period of a few months. So it's just one of those things where crypto moves pretty fast. So if you didn't catch this cycle, it's okay. We've already corrected. We'll go back up in the bull cycle. You'll be able to make money off of this. Don't be too hard on yourself. Learn from it. Don't walk away and never do this again. Make some decisions for yourself, like risk management in place, always keeping 30% US dollar tether, learning how to use basic stop losses, getting yourself a trading plan, investing in some education, and use those things to your advantage, but don't ever give up, because the only way you can lose is if you give up. You can lose some here and there, and you might get burned and you might have some painful days, but the only way to actually lose is to stop trying. And if you keep trying and you're dedicated, and you don't have to be crazy about it. I was a little bit crazy because once you start to do it, and especially once you start to make money, you go like really crazy and just want to do it 24/7 all the time. But you don't have to. I mean, if you come on here and you do this 20 minutes a day, an hour a day, you don't have to buy or sell an hour a day, but learn TA an hour a day and make charts for an hour a day, then you'll get to a point where you feel comfortable. And once you're at that point where you feel comfortable, then you'll start to really see your profits growing, your risk management in place, and you'll feel comfortable. You won't feel nervous or scared. You'll be able to understand when it goes up and understand when it goes down, and let your long-term portfolio go way up and way down. Let your short-term portfolio continuously grow, and you'll get good at it. So that's my advice. Don't be too hard on yourself. When people beat themselves up or always look at the negative or always look at the problems instead of the solutions, it doesn't take anybody anywhere. So. Yeah, I know the feeling of wanting to puke. Trust me. There's been one loss specifically in like early 2000, the 2016 loss really sucked for me. It wasn't that much actual US dollars, but because I didn't have much in my life at the time, it felt like I lost everything. And then there was another loss, and it wasn't all of my portfolio because I had understood risk management at that time, but there was a day where I lost enough to buy 2 houses, and that was like 6% of my portfolio. So I was like, oh, whoa, that was sick to my stomach. But thankfully I had risk management in place. So, transparency is key. Understanding that things will happen is key. Always be open with yourself and other people around you. You can do well. So for anybody that's lost money in this crypto market, I really do feel for you, but don't give up because of that. Just understand that this is highly volatile. A lot of people lost a lot of money, but you can be smart. You just have to go about it in a more calculated manner. So. If you have the feeling, Sander, that you need new beginnings, then that's a good sign. If you have that feeling, you don't have to experience pain to grow, but sometimes you do experience pain to grow. And often that happens in markets when things sell off and you don't have your plans in place, right? Or your risk management in place. And you're down 80% in your portfolio or something, and it's like jumping in a cold plunge and then getting punched in the face right after, and then you have to sit there and be like, oh, okay, how can I do this differently now? So that feeling kind of sucks, but understand that it's also the feeling of a new chapter, kind of, and a new beginning for you. And that chapter, in my opinion, is starting, and the bullish chapter for crypto is coming back, and we will enjoy this run again, and people will make back all of what they lost and then some. I know it sounds crazy right now, but when everything starts going up thousands of %, and everything starts going in for the next wave, and everything starts going overvalued again, as long as you're taking your profits and scaling out, you will be okay in the next run, and you'll make back everything you lost. You just plan yourself. And obviously I don't guarantee anything, and this isn't financial advice. That's just disclaimers to protect myself. But I really stand by what I teach. With that being said, I stand by Elliott waves. I stand by averaging in and out and using Fibonacci and finding resistance and support and playing these cycles like this. I know that it works. I've seen it work for myself. Even just like one person that I follows my group I told him to buy a certain coin, and he was able to make $2.6 million off of a 5,000% move on Stellar Lumens. So I've seen, that was one single trade that I recommended to him. So I've seen this work in person, and the text message I got from him after that was just like, so thankful for everything that I'm doing. So, I love crypto. I love trading. I love learning. And I hope you guys love my content as well. I love you guys too, every single viewer. I really appreciate you tuning into these, liking my videos. If you haven't yet, smash that like button, hit that subscribe button if you're new to my channel. And, I'm going to keep doing this. This is my passion. I love educating people and decentralizing investing so that everybody can be doing this. So, as promised, I have a course, highaltitudecrypto.io. Now, you can come here, and I used to do 20% discounts, but this is a valuable product. I'm not just going to give it away all the time. So the discount is 10%. Live Moon. This is how you get to learn all of this stuff. If you're feeling like you need better information, better knowledge, more accurate signals, more detailed information, and actually to do this, go to my website, apply this coupon code. I have 3 different products. There's a beginner product, which is a year subscription, a lifetime product if you want to really get your hands in, and a mastermind product if you want to copy everything I do. I have a portfolio called the Mastermind Portfolio, and you can look at the exact percentages of everything that I hold and when I hold it and when I scale out and when I scale back in. So, that's all on my website, course on that information. John, I'm not going to tell you exactly how much I've made, but it's like I said, I had a loss, which I could have bought 2 houses with. So I don't want to tell you exactly how much that dollar that I've made, but that was only 6% of my portfolio at the time. So that gives you a rough ball estimate of the amount of value that I've been able to produce in the cryptocurrency space for myself. Hey, thank you, Special. I appreciate that, man. And then, as always, the documents in the description. If you want to click on my technical analysis on Bitcoin, it's all updated here. If you like what I'm doing, I have a Bitcoin address for donations. Coinigy sign up. If you want to sign up for Coinigy and do charting, it's similar to TradingView but has more coins. BitMEX, if you want to do leverage trading, I do not recommend this for beginners, but if you're a little bit newer or longer in this space, you can leverage your trades here. And then again, my website is right here, and the code, the 10% off code, is Live Moon. So, I appreciate everybody tuning in today. I hope that you've been enjoying the flip that we've had in the crypto space and the positive kind of momentum that we're getting here. Again, on the very short term for the next couple days, we might see a little bit of panic, but there's no reason to panic out of your positions. I would just be accumulating little bits. Make sure that you have some US dollar tether on the sidelines so that if things fall, you can just buy more rather than panic selling and just, let these cycles play out, because I see a lot of upside growth for crypto, especially into 2019. By the end of this year, we're going to be full bullish, and I predict that. And then by mid-2019, it's going to be ridiculously how overvalued cryptocurrency will be, and it might just keep getting overvalued after that for a while. But that's the way I see things. And again, towards the end of this year is where we're going to just be in fully optimism mode. Everybody's going to be buying cryptos again. So, thank you all so much for tuning in today. I love you, and I will see you in my next episodes of the Craving Crypto podcast. New episode tomorrow. It's not a stream. It's more of a sit down and talking, probably tell a story episode. And then hopefully I can get in contact for another interview on my channel. So, thank you guys so much, and I will see you in the next videos. As always, stay profitable out there.